Hello investors, thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Nutrien. So Nutrien is well positioned to benefit from this overall disruption that's happening in Europe with the crops in Europe, how they're going to get priced, and ultimately there's very low inventory for potash and nitrogen, and there's a spike in prices too. So that's the context here. But even in and of itself, even putting aside all this kind of Russian sanctions, even in and of itself, I'm going to lay out for you that this is quite an interesting investment opportunity. Obviously, the Russian impact here from Nutrien's perspective as an investment is upside optionality. But as you go through and you see that A, the business is growing, B, highly free cash flow generative, C, you got some share buybacks thrown in there too. I think that this is a very favorable investment. So as I already kind of alluded to in the introduction, there's been a recent pop in these shares, and investors are kind of, after years of like not paying attention much to this space, everyone's thinking to themselves, okay, why would I be investing in, let's say, tech, where I'm paying, let's say, sometimes north of, let's say, 100 times next year's future earnings, when I can get something like this that is, with a strong balance sheet, has some growth, there's some upside optionality in the backdrop of the macro environment. So, it seems kind of interesting. So I think, there's the risk reward here ultimately, I think is quite favorable. Okay. So as I already kind of touched about several times, there's the invasion of Ukraine by Russia, and this has brought about sanctions to Russia. How companies in Russia are going to actually get paid, the banking system there. Also, you got to think about from Belarus itself, even though there's no sanctions on the crops getting out of that, you still have to think to yourself, okay, there's an absolutely logistics nightmare happening here. How do they actually get, even if they want to get the crops out of Belarus to their own end customers, it's going to be tough. So also you got the backdrop of prices of gas being particularly strong. So this puts European players at a competitive disadvantage relative to Nutrien. So all this together kind of lines up nicely for investors in Nutrien. So yeah, I think that there's some kind of optionality here, but ultimately, as we go through, Nutrien in and of itself is quite attractive as an investment potential. So, they came out of Q4 up 84% year over year. So this is way before anything happened here with Russia, okay? The guidance for 2022 is looking quite strong. But now you got to think about it, right? So we're in this play here where the first part of 2022 is going to be really strong. Everybody knows this, right? There's the question mark, which we don't know, is what's going to be the exit rates out of 2022. Q4 was expecting to be down 12%, 13% year over year. Is it possible that this fallout lasts longer than people expect, and that the second part of 2022 is not as bad as people had been predicting? Maybe it does not collapse the revenue growth rates. So there's some uncertainty here. I don't know the answer to any of that, but I just want to point out like the bull and the bear case for you to kind of think through, make your own assessments here. So yeah, I think that there's a lot of this uncertainty already priced in, and I think that, it's really difficult to kind of have enough visibility here. But I suspect that given the favorable outlook that Nutrien puts out for itself, they're going to beat that bottom line profitability, and that this investment is actually cheaper than what I'm going to talk about right now, okay? So if you've been following me for a little while, you'll heard my spiel. 2020 into 2021, everyone was obsessed. Growth at any cost. I mean, any cost. And now people are kind of thinking, maybe not. Maybe it doesn't make a lot of sense to grow for growth at any cost. Maybe profitability does matter. And yeah, so they use this measure of free cash flow, including non-cash operating working capital, which is what I've used my own free cash flow estimate here. Ultimately, that that working capital is very much necessary. So even if it's a non-cash, at some point it needs to come out of the system. That's, your asset retirement obligations, and you have your pensions, and it's like, those are real costs. So you do need to include that. But in any case, year over year, 2021, they grew the free cash flow, including all those working capital changes, by 10% to 2.6 billion. Okay, so that's the number that I want you to remember. 2.6 billion is what I want you to base our calculations on. Now, before we talk about what Nutrien is using their free cash flow for, just keep this in mind. Okay, when they came out of 2021, they had a net debt to EBITDA meaningfully better than it was in at the end of 2020. But looking ahead to 2022, the net debt to EBITDA figure is going to fall just below 1. So they'd often talked about being at 1 times to 3 times leverage. So this is at the lower end of the leverage. So the balance sheet is in a good position, flexible balance sheet. There's a lot of opportunity here. Now, let's just keep this in mind, okay? So Nutrien is guiding for EBITDA to be up approximately 10 to 11.2 billion, okay? So let's take the middle finger there, pardon me. If you take the middle figure there, which is 10.6 billion, if you think that in 2021 the adjusted EBITDA was 7.1 billion, so there's a pointed to nearly a 50% year-over-year increase on the adjusted EBITDA line, okay? Now, not all of that adjusted EBITDA figure translates into free cash flow. But if we think about this, right? So I talked about 2.1 more or less of free cash flow. So if you said, okay, rather than the EBITDA increasing by 50%, if this ultimately translates into the free cash flow, including working capital, increasing by just 35%, you end up with 3.5 billion of free cash flow, which I think is a very conservative estimate. And this gives me a large margin for error. Now, if we think about this, right? So that free cash flow, there's only so much a Nutrien can invest in their own business, okay? Yeah, they do want to invest in a business, blah, 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 but they are saying to themselves, okay, our balance sheet is already at the low end of the leverage, so, what else are we going to do? So they talk about repurchasing 10% of their market cap over this year. So this is going to meaningfully drive that valuation even lower. So as it stands right now, the market cap is approximately 55 billion or 70 billion Canadian dollars. So let's use the number 55 billion market cap USD. So this puts a stock price at approximately 16 times this year's free cash flow. Now, we have the stock buyback also to contend with, which will bring that down ever so slightly. So it's probably closer to 14, 15 times free cash flow for a business is clearly growing. This has some cyclicality to it, but a business is growing. And yeah, so I think that this altogether, there's a lot of ways for investors to win from this point. I think this is quite favorable. And yeah, I hope that this is something that's helpful to you to think about this. I don't know when exactly things in Europe are going to get settled, but the longer it takes to get settled, from Nutrien's perspective, that looks favorable for them. So I hope you found this useful. Don't forget to check out my marketplace, okay? Right there above the screen, Deep Value Returns. I highlight for you high quality, actionable investment insights. Check out what other people said, check out the reviews, check out some of my other work on Seeking Alpha. And yeah, thank you so much for listening. See you next time. Bye.